The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 10th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes. And I absolutely know that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Excuse me there. Little frog is still in that throat of mine. Of course, you can send me an email, steve@tfnn.com. Terrible. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow up 50 points, trade at 20,706. S&P is up 5. Really, all the indices are in the green with the exception of the semiconductors. Down about 0.5%, was down a full percent earlier when I checked on it. You've got gold off $2, silver down 23 cents. Light sweet crude is up 64 pennies, trading at 52.88. Let's start by taking a look at the indices out here. Let's go take a look at the Dow. Right now, trading at 20,706. We can see that price is trading with inside a wedgie pattern out here. So we've got a rising trend line at the bottom. We've got a declining trend line at the top. No idea which one is going to get busted. And whichever one does get busted, we've got an apex of this triangle to identify a minimum price objective when the triangle gets busted. If we take a look at the S&P 500, we're going to see the same type of pattern. Earlier today, it was the bears trying to bust through the descending trend line, failed to do so. Maybe price runs all the way back to the top of its descending price channel out. Well, not channel, but a trend line that we're using out here. So you see a similar pattern between the S&P and the Dow. Inside the NDX 100, not so fast. This is really trading into its swing point high, all-time swing point high from April the 5th. Until it closes below 54.0904, this can easily go test the top. 54.7986 is the number. So, you know, a couple of days of indecision out there with those doji-style looking candles. Today, just another small-bodied candle. It does suggest indecision up at this high out here that we're at. But, again, price is trading inside that swing point. The top can be tested. Inside the NASDAQ Composite, a similar pattern. It's trading inside its all-time swing point high out here, that being the April 5th time frame. That says price could go test 59.36. Unless it closes below 58, 56, 26. So you've got really 3 inside days, in essence, that we've had inside the NASDAQ Composite. It is not tipping its hat as to what it wants to do. Russell 2000 has its own little wedge pattern that has formed. Forget about the yellow line. If you're watching me on TigerTV, just look at the descending red trend line, the rising red trend line, and you can see that this is the containment level of price. Now, what does that mean with regard to if you're trading the ES Mini, the Dow, the Russell 2000? Exactly. That you are exactly correct. You have a two-way market that is out here. That's why we've seen the gyrations that we have seen intraday out here. And that's really important. It's really important with regard to intraday traders out here. So you want to anticipate that this is an absolute two-way market. At least to me, that's what the message of the Russell, the S&P, and the Dow is. If we take a look at the semiconductors out here, go to try to figure out what they're doing, you just see a descending trend line. There's really nothing. You can draw a straight line pattern off of the lows, perhaps from the March 21st candle out here. So until it breaks below that low, 986.99, looks like the beginning of a downtrend has formed. That's in the semis out here. The New York Stock Exchange, we take a look at that. This is kind of an this is not the interesting pattern. This is the same thing as what we see in the Dow and the S&P 500, right? You got this nice little wedge out here. What is interesting, though, with regard to the New York Stock Exchange, and I'm glad you asked me that question out there. If we take a look at it, let's do this. Let's come over here. Right now, if you watch us on TigerTV and you look at panel number 2 on my screen, you're going to see a reading. It's a huge number out there, 395,869. Maybe say that's not so huge, but that is the calculation of the advanced decline number, advanced decline line for the New York Stock Exchange. Mine would be different than yours and different than Joe Black's and different than, somebody else's, because it all depends on when we actually start that advanced decline count and counting and summation of those numbers. That's really what we're looking at, is the advanced decline summation of all prior data. But the number 395,875, what's interesting is the all-time high was on March 1st. That number is below where the advanced decline line data is traveling right now, 394,474. I didn't have a chance to do the advanced decline volume because I have to do that separately. To see if we have a divergence. And if we do have a divergence, it is meaningful when we see some type of bearish action out here. But this is a very positive. Bull markets do not end. You just go back and try and prove it. I can prove it because I've done it. Bull markets do not end with the New York Stock Exchange at a new all-time high in the advanced decline line. They just simply don't. And even when there's a divergence that takes place. So those of you that are gearing up for, like, you're just ready for whatever you want to blame it on, this to turn into a big, huge bear market out there, man, go smoke something else, because that is not the smoke signal that is coming from the New York Stock Exchange. Now, and if we take a look at it, we saw that wedgie pattern that is out here. You can see that the advanced decline data, now the oscillator information, which reads 85.17 on my screen at the moment, or it's oscillating back and forth between 85. It's right in the 85 area, but it's below 150. 150, if it gets up to plus 150 or higher, well, then what you've got is what typically is acceleration mode. We're not there just yet, but it's above zero. It actually says that in the New York Stock Exchange, the hands of the market are inside the hands of the bull. The hands of the market, the New York Stock Exchange is in the hands of the bull. Let's just try to get that sentence out. So what's interesting here is if we go ahead and break down the New York Stock Exchange between the actual composite, and then how about the top 100 equities versus the top 100 international equities. The interesting thing, if we just use that March 1st date, the international equities are back up at the high of March 1st. That's not its all-time high. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So before we went to that last break, we're taking a look at this chart here. Top panel being New York Stock Exchange, center panel being the top 100 U.S. Equities, and the bottom panel being the international. So in one sense, you could go ahead and eliminate the international area as where, I do believe there is a retracement that is ahead of us. But that's all that it is out there. It's a retracement to be bought whenever it occurs, and then when the next bottom forms out here, then it could be today. I mean, I cannot say that it's not, but it's more the U.S. market right now that is, with regard to the NYSE, that where we're seeing just a bit of the underperformance out there. So take that for whatever in the heck that might mean out here. With regard to we're taking a look at the advanced decline data inside the NYSE, I go to this panel chart out here, which has New York Stock Exchange left-hand side, NASDAQ Composite next to it, Dow next to it, and then the S&P on the very right-hand side. It is only the New York Stock Exchange that has the advanced decline oscillator reading above zero. The NASDAQ Composite, not the case. The Dow, not the case out there. And in the case of the Dow, that advanced decline oscillator reading has been below zero for so long, back in the early part of March out here. March 2nd, March 3rd. What day was it? March the 3rd. But still very little price damage. Some, but not yet enough. No cigar out here. So we have and you've got the volatility index. If you take a look at the S&P 500 at the very bottom panel, right-hand side of the screen, you're going to see a reading of 1363 versus 1210. 1210 being the 50-day exponential moving average. So that's saying, not so fast to the bull. So we have a very confused market out here. Or maybe it's just a very confused commentator. I'll drink to that out there. And speaking of confusion, and we talked just about the S&P 500. That is quite a segue, if I must say, out here. If we go take a look at the S&P 500, I like this one. You've been waiting for this for a while here, because we're going to go look at the Guggenheim equal weighted ETF out there. I just, for some reason, love to say Guggenheim out here. And we're taking a look at line charts, so you know that means that we're just looking at closing prices of the RSP. That's right, the Guggenheim S&P equal weighted ETF versus the actual SPY out here. And if we just draw an interesting trend line from the high to where the second high is. So in the RSP, we're dealing with March 1st. Then we're going to go ahead and deal with March 15th. Then we're going to, in essence, deal with the March 30th, 31st time frame. As we speak right now, this is more important with regard to how the day ends out here. See, I didn't say end of the day, how the day ends. But right now, the descending trend line inside the equal-weighted S&P 500 has broken above the trend line. It's broken the trend. The trend is your friend to the downside. It no longer is now. I do not know how this closes at the end of the day. So remind me tomorrow, we'll take a look at it. But if it closes above, it is the equal weighted ETF that tells you the underlying strength or weakness inside of at least of the S&P 500. This is actually a positive sign for the bulls, assuming that it closes above the trend line. If I were to try to give you a number on it and guess where that might be, it's probably 90-50. You're at 90-80 right now inside the RSP. But let's not. Let's just. We would want to see, or you'd want to see more data, more days worth of data with a close above this. But that is a actual positive message for the S&P 500. If we go take a look at the QQEW, unfortunately, it's not a Guggenheim ETF out there. It happens to be the First Trust QQEW, 5154. That is not trading above its all-time high, which is on the trading day closing high, by the way, of March 30th, which was 5175. You're at 5154. But the reality is the equal weighted looks pretty good. By the way, inside of the QQQs, the actual closing high, 132.51. That came in just a few days ago, back on April the 4th. You're at 132.29. So if both of these get above their all-time highs out there, that's a positive sign. There's no negative, there's no bearish divergence, in essence, in either of these charts. There's only actually bullish divergence with regard to the RSP, with regard to the S&P 500. And then I suppose you and I haven't looked at this for a long time. We used to look at this often, which was the Dow. And in the case of the Dow, we really only looked at one individual stock, that being General Electric. And in the case of General Electric, we'd have to go really take a look at it. And get a better understanding for what GE might be doing. But where'd that come from? That is an interesting default. How about that? I don't even know what the heck that was. But you can see here that GE has been rising off of the March 22nd closeout here. And we cannot say the same thing about the Dow. The Dow has just really been going sideways during that same time period out here. And what's interesting is it's actually GE, the direction of GE, that points the way as to where the Dow will eventually head to. So what does all of that mean? That means, hey, look, we go back to the Dow in this case here, and we pay attention, and we focus on that descending wedge, or this wedge pattern out here. We focus on that descending trend line. If there's a close above it, well, the bears are going to have to sit it out for a little while out here because in the case of the Dow, the expected, anticipated move out here of a breakout to either side, right? To either side. You have to plan for both sides. To the upside, you're looking at getting back beyond the highs. So March beyond, to March 1st and beyond. And to the lows, what you're looking at doing is you're getting back to, in essence, one of the gaps that's open on February 13th, probably below that. I would say it really gets you back towards the February 3rd level out here. And that's what I would be watching. So watch that descending trend line inside of the Dow for some big clues out here. But with regard to the clues that say we're going downtown out here, we just have a mixed bag. If we're going to look for clues, let me see if there's anything that I can see. Just because I can or can't see it doesn't mean that it's actually there. But if we do take a look at what, here, we'll put this up here on the chart. What's another thing we'd be watching for in the Dow? It would be Stevie's red line, right? And which almost was tested earlier. 2772 is the number. Remember, this number is going to change periodically, not periodically, but each moment. But do you figure the 2772? Close above that would also start to turn things. It says that its price also would start to rise. It's above zero. That would say, and then if the trend line is broken, and then you go back and you take a look at GE, all those things are actually bullish messages out here inside of the market. So it's easy to be cautious, bearish from a directional standpoint, but it's also easy to see the bull's side of the story, right? Who was that guy? What's that guy's name? Always on AM radio. Been around forever. And that's the story, wasn't it? Who was it? You know the guy's name. I just can't remember it off the top of my head. Yeah, the rest of the story. Who was that polar bear? What's that guy's name? Come on. You know who it is. Paul Harvey. Thank you, Mr. Bill. I'm no Paul Harvey, that's for sure. Steve Rhodes with TFNN. Dow's up 46. S&P is up 5.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. What did I do to my email system? Man, this is not really good. Interesting. Very interesting. Okay, now we're back. Okay, I don't see any email requests out here, so let's go do some of the standard stuff. because I'm sure those emails are coming. Gold, silver, the mining equities out here. Let's start with the mining equities. Let's just get that one off of our plate out here. GDX. What do we know about the GDX? Ain't no sunshine when we have Paul Harvey out here. I didn't know that. On the line, we've got Brent in California. Brent, thanks for calling. Thanks for holding. Sorry that I didn't see your message earlier. Do we have Brent? Hello? Oh, man. He dropped. That is a bummer. But what Brent wanted to look at out there, and I'm sorry, is Devo, you gotta ping me inside the den out here, because otherwise I really can't see that other system that well. But Brent wanted to take a look at NAT is the ticker symbol out here, which is Nordic American Tankers. Wow. Nice move out there. I'm going to assume, Brent, that you are in this little puppy out here. And today is a breakaway day. That is for sure. Talk about some volume off of the bottom out here. Let's see. Do we have it? Got 1.2 million shares. Last time you were up here was about 945. But more importantly was that little trend line that was drawn on my system. Let's extend that trend line. That trend line was probably from the last time that you had called there. So now you've got a break of a trend. You're above a TAS daily high out there. You're back inside the weekly box as long as this closes above 828. And right now you're trading out at, 828. Right now you're trading at 859. All looks well to at least head for the gap. Looks like there might be a small little gap between the January 20th low of 896 and the 893 high from January 23rd, which had 4 million shares there. So Nordic American Tankers, that is where it's headed for. I'll have to assume it's going to be at least the bottom of the gap, meaning the low of January 12th. And, if this can move inside there with more than 920,000, certainly more than 4.4 million, that would be impressive. But at a minimum, you'd like to see at least more than 2.1 million shares. Let's go take a look at Nordic American Tankers. NAT, again, being the ticker symbol out here. Is there any other low, any other bottom formation? And I'm just looking at my other screen. I don't see it out here. What else was Nordic American Tankers doing? Well, it was really trading into a swing point. There was a little gap breakaway back on November 10th. That was 5.1 million shares. And as price came back, in essence, into that area, 1 million shares, 875, 855, 736, 585. I mean, really, it was just communicating that it did not have the volume to try to bust out those lows. There were no more sellers. And what we've got now today is buyers. So, Brent, if you're in that position, again, thanks for calling. And more importantly, congrats on the trade out there. Where could this run to? Where is the likely next step that this could run to? 969. Watch the 969 area. As soon as it gets above, if it does get above the gap, that happens to be the TAS weekly point of control. And it's an area that held as resistance. It is set up with the structure of sellers being in control of the price area from 828 to 1040. So just watch that 969 area out there. And if you can close above that, then that says you can get 1040 out of this equity out here. Okay, okie dokie. I was taking a look at, what was it? GDX, I think maybe? GDX it was. I second that motion. So if we do take a look at the GDX out here, nothing really doing here. So for those of you trading the triples, God bless you. And not because you just sneezed, but because this didn't sneeze out here. This is just a sideways kind of consolidation. Tom likes to call it build and cause out there, but you don't like being in those triple ETFs, build and cause. Now you got to trade it real intraday. That's a totally different story. But in this case here, you've got to see it close above 2361 before we can get 2535 out there. Better to be inside the GDX than the Nugget. Dust all of those equities out there. Does this mean that the move inside of the GDX is over? No, but remember Nordic American Tankers, we drew a trend line. There's no reason that you and I can't draw a trend line here inside of the GDX, right? So here's your trend line. you can see another form of resistance inside of the GDX. Both that, and if you take a look at the weekly market profile, the TAS market profile out here, you can see a similar looking structure to that of Nordic American tankers. We can see how that point of control has really acted as resistance. We now have a downtrend line. It does mean closing above that would be, a very bullish message out here. We're just not there. Will the GDX pull back to 2156, 2256? I don't know. I don't know the answer to that. It will if, for example, Duffy is able to buy the yen or sell enough yen out here to make it weaker, right? If Duffy's out there selling the yen, let's go see if he is selling the yen out here, then maybe. No. If we take a look at the yen, here's what it's doing. It, too, is stuck in a range, right? If we take a look at, I don't have the GDX chart up on my screen out here, but the GDX was stuck in between, two market profiles, right? Look at the yen, stuck in between two market profiles as well. So at this stage here, what the yen currency pair is doing, trading at 111.67, give or take, because I've got a 15-minute delay on it. And unless this closes above 10, what is the number? I'm sorry. I said it, 111.67. Then if it closes above 111.67, then the GDX probably does pull back to that lower range out there that I gave you the number of. Otherwise, I don't know. But this is stuck in a range anywhere between 110.34 and 111.67 until this thing is broken. We probably don't see a whole lot of movement inside of the mining equities, just a bunch of back and forth action Jackson or no action Jackson please out here. So Duff, I hope that helps you out with regard to the yen. It's not doing a whole heck of a lot either. If we look at silver, silver has gone to the sick ward out here, and it got into the sick ward today. It checked in. It's still there. It's getting an shot of antibiotics out here, but those antibiotics are not going to kick in unless this gets above 1797 out here. 1797 happens to be the bottom of its daily profile. The mere fact that it's trading below that says, to me, silver does not have as many friends as gold has. And when you start losing friends, in the case of the stock chart out here, says it can go lower. You say go lower to where, Steve-O? And I would say you cannot take $17.23 off of the table. You can if it closes above 1797 today, but right now that is a rejection of a market profile that has a structure that should have been owned by the buyers. They seem to be gone. They're sleeping. They're catching some Z's out there. I'm not referring to the Z in our Tiger's Den, but they're catching them nonetheless. Dow's up 65, S&P's up 7. We got a two-way market. When's the next short-term top going to form? Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. I have a request out here to go take a look at the natural gas contract for June. We can see 4 different panels if you're watching us on TigerTV. Panel number 1, that just happens to be the different instruments. Panel number 2, though, the chart-wise, is the 60-minute time frame for the June natural gas contract. Then you've got the 4-hour chart, 240 minutes. And then to the right of that is the daily. And then on the very right-hand side is the weekly. On the weekly, let me go ahead and turn those trend lines off just to get rid of some data, make it a little bit cleaner. Okay, so as we take a look at this, let's go ahead and explode up the 60-minute chart out here. And the levels that you'd be watching on the 60-minute chart, well, let me go ahead and add the data window. This way it'll make it a little bit easier for you to actually see. So the very bottom of its box out here, which price is trading just above, the very bottom is $3.30, 3.308 to be exact. As long as natural gas trades above that, well, then 332 becomes the next target, and above that, 334. Now, that profile, that 60-minute profile, is pretty much equally distributed. So I can't tell you who's in control of that price area. You just need to watch them. Closing below the bottom of the 60-minute profile would say, hey, sellers are the ones in control of this contract, of the 60-minute time frame. If we take a look at the a little bit larger time frame out here, that being the 4-hour time frame, we can see that price is trading below the bottom of its profile low. Now, that box was structured so that sellers were in control at the 335 level. Let me go ahead and add the data box here, the data window, if you will. And so you can see that what you're watching there from a price standpoint is 331. You're trading at 330 right now. So as long as price stays below 331, this says, okay, you go down to the next level. Where's the next level? Well, we go take a look at the daily time frame. Daily time frame shows we are trading within a brand new box that formed today. And let's go ahead and put that data window on the screen as well. And we'll put that up here in the left-hand side of the chart. So you can see that 337 becomes the top. The point of control where price is trading right now is 331, so that's a level for you to be watching. We've already really discussed that. And any clear breaks below that then suggests that price heads down to the 322 level. Now, this is the daily chart. I didn't have enough time to put the June contract in my other charting platform, so I have to just default to the continuous contract. But I'm guessing, and I hate to guess, but it looks to me like the chart pattern is the same, and that if we do some counts, some wave counts off of the bottom, that a few days ago you get up to wave number 7. So that's an important piece of information, if in fact that is what occurred. Also, it looks like we were in count number 12 of Tom DeMark's sequential system out here. We're also in count number 12 as far as Tom DeMark's combo system. All three of those, well, you haven't done it yet. The 7th wave suggests potential top. And if you get the sequential signals out there, that too suggests a potential top. But I'd have to go actually put the current contract June in my system. I'll do that. And if you remind me, then we can come back and we can take a look at this mañana as well out here. So the daily, if we go take a look at the weekly set of profiles out here for you, just to round this up off, you've got significant resistance at 339. That is the top of its weekly box. Closing above that would be muy bueno. But know this, at this stage of the game, that is your resistance zone. And that is not classical gas, but natural gas. I didn't see any emails out there, so let's just go back to the markets and go back to our main page and kind of just surf around and see what it is that we want to talk about. We really talked about the mining equities. We talked about gold, silver, the yen a bit. We haven't talked about light sweet crude, so why don't we go do that? If we take a look at it, it's straight out of 52.93. It's headed up into the 53.43 level. Perhaps I did catch a little bit of Larry's show, and I know that last week or the week before he had a guest on that was sharing the Andrews pitchfork system out here, and I did go ahead and put that in on my screen. So it does suggest that's that little descending red line that you're now taking a look at from upper left to lower right out there, that maybe light sweet crude has run its course out here, and then that would say price might pull back in the 51.16 level out here. So no other signal. I don't think I have anything on a short-term chart, but I haven't looked at it for a couple of hours. So let's just say I don't know with regard to the short-term chart out there. But that's your view of, that's your look at light sweet crude. Looks like it's close to or at a resistance level, and so retracement is likely due in it. I have. Oh, I do. Whoa. Yeah. No, I don't see anything else on my other chart as I take a look at the current contract for light sweet crude. What else do we want to really look at out here? Let's go look at a couple of individual equities until asked otherwise. How about Amazon and Tesla? Amazon up $11. That's 1%. What is it doing? You know, just trading inside a brand new profile that formed on Friday. So that says it's got some resistance up at 923.72, and it has support at 857. This box here is equally distributed. So, who's in control? Who's to say? Not Steve-O. It just doesn't give us a good, clear indication. We did move lower a couple days ago with 6 million shares and then 3.7. Today you're up with 2 million shares. So you'd almost say that at this stage here, between the price level of 923.72 and, 886.91, just looks like, can you say sellers are really in control of that price area? They probably are. That is in Amazon. We look at Tesla, new all-time highs, gapping higher this morning. Or today, this morning. That would make a lot of sense. Always the potential, and I just mean potential out here, of a island reversal. But remember, we looked at Tesla, and we said, hey, look at this Tesla chart. It's trading a sideways consolidation. Probably easier if I put the weekly chart out here. There we go. That's much easier to look at. And so what Tesla has done, what it did on Friday, and by the way, from a weekly standpoint, it did it with what? Exactamundo. Conviction. 42 million, I do say million shares, taking out volume of 19 million. Taking out volume of 36 million. Yeah, this is the real deal breakout. Will Tesla and people are complaining about it being the most highly valued car company in here. And that's where they're trading at 312. If it fulfills its price objective of the consolidation pattern, what are they going to say when it gets to $400 a share out there? That's right, $400 is what it looks like Tesla wants to head to out here. So what this has now is support at the top of its consolidation box. As long as it stays above 288.21, it has onward and upward, just like a little rocket ship out there. Will it come back to Earth where they can just simply, rebuild it out here? I don't know. Is it? Yes, it is a bubble to the upside. But the bottom line is, Duff, you and I, if we just simply took away the signal, the name, the symbol, and we just looked at the pattern out here, we'd conclude the same thing. It's a real break until proven otherwise. That's ticker symbol TSLA. Even for those that don't want to admit it, like the Chanos man. Yikes. Ouch. Steve Rhodes, we'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. I got an email from someone saying, please, please, please find something bearish for me in Tesla. I have the daily chart on my screen. I can just tell you, technically speaking, it's not there. You might say, what do you mean by that? Remember, we talked about the weekly chart being able to take out swing points with volume, which really overrides the daily chart. But nonetheless, I have the daily chart out here, and you can see that the A to B equals CD pattern, the C point, which is the trading session from February 14th, which did volume of 7.3 million shares. That was taken out last week or the week before, April the 3rd, with 13.8 million shares. That is called wide price spread accelerated volume as it takes out a swing point. That gives you an A to B equals CD price projection. Let's see where this thing takes us to. Does it take us to the top of the consolidation box? No, not the 1-to-1 doesn't, which would be 349. But the 1-to-1.272 gets you pretty close, 378.61. Now, this doesn't say that this thing can't sell off and there be a gap down tomorrow and you get an island top. In that case, then I could say, okay, there would be your bearish signal. But as we speak right now, it just isn't there. No matter how I try to find it, I don't see it. It's just and I'm not gonna lie to you. That doesn't make any sense out there. So if you're short Tesla, just have a stop in place. Just be very careful, please. Chipotle, that's on fire. Yeah, sort of on fire. Let's go see what it's doing. CMG is the ticker symbol, up nearly 2% today. Volume behind the move out here in Chipotle is about 372,000 shares. It's very light volume as it takes on its prior moves to this level here. 459.45 happens to be the resistance zone inside of Chipotle. But that doesn't mean that it won't break it. And if it does break it, where's it going to head to? Probably heads all the way back to this little gap to the downside from March the 9th. And the level out there is somewhere between 518.61. Maybe it's as low as 492.50 out there. It's trading right now at 455. But Tesla looks like it has changed course out here. It's got an A to B equals CD pattern as well. But that's big volume and has not passed the February 3rd level with similar volume. That was 3.5 million shares. Doesn't mean that it can't complete the A to B equals CD. It just is not as strong looking, believe it or not, as the Tesla one. That does not mean that Chipotle is not going to move to higher ground out there. That is not what that means. AutoZone is in the zone today. AZO is a ticker symbol, up about 1%, up nearly $6. What is AutoZone doing out here? Well, what was it doing? What was it testing? Was it testing anything out here? It was. There we go. So AutoZone had a swing point from back in February 2016. Well, that's not it. February the 8th, is that it? February 8th. Volume there was 656,000 shares. Now, the bottom never got tested. As price pulled back was with $4.99. That set the bottom back on April the 4th, just a few days ago. However, this thing has got resistance all over the place. The first place that it has it at is going to be 710.07. So in order for AutoZone to really get in the zone, it needs to close above 710.07. And then maybe, and I say maybe, then maybe it gets back into the March 31st level between 716.95 and 727. Even Steven out there. Well, folks, stay tuned because your favorite polar bear in mine, David White, is up next. Then we've got Tom O'Brien from 3 to 5. Dow's up 53, S&P's up 6, NASDAQ Composite is up 14 points out here. We can find some very positive things for the bulls. Many positive things for the bulls, and I can find many negative things for the bears out there. That means we've got a two-way market. Stay tuned for David White. I'll see you on Terrific Tuesday. Have a magnificent and magical Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.